Hello and welcome to this special video interview where we discuss various gold investment topics with the World Gold Council. Now, as many of our viewers know, the Royal Canadian Mint is known as a world-leading refiner of gold and silver, precious metals, and also produce some of the world's best-selling investment products. So today we have the privilege of being joined by Jeremy Depesmier, an esteemed member of the global research team at the World Gold Council. As an asset allocation strategist with over 15 years experience in global multi-asset investment strategies and solutions, there's no doubt that Jeremy will bring some precious insights to our discussion today. So Jeremy, thank you for joining us.
Thank you for having me, Tiffany. I look forward to the discussion today.
Right now, as you would know, an investment portfolio can contain a wide range of assets, and that includes gold. So when it comes to gold, our first question to you is, what strategic role does gold have in a portfolio?
Yeah, it's a good question. And, we as an organization believe that gold has a key role to play as a strategic long-term investment and as a mainstay allocation in a well-diversified portfolio. And some investors have been able to recognize much of gold's value over time by maintaining a long-term allocation and taking advantage of its safe haven status during periods of economic uncertainty. When it comes then to gold's characteristics, we are of the opinion that gold can enhance a portfolio in three key ways. The first one is that gold can deliver long-term returns, and whilst some investors only consider gold a beneficial asset during periods of economic uncertainty, historically gold has generated long-term positive returns in both good and bad economic times. The second way gold can enhance a portfolio is by improving diversification. And considering the current economic backdrop with recession fears and high inflation, diversification and risk mitigation are particularly high priorities for investors today, and we feel gold can play a significant role on that front. The last point then relates to liquidity, and gold can provide liquidity. The liquid nature of the gold market may be beneficial during times of market stress, where many other assets can be subject to liquidity constraints. So that, in summary, is the strategic value of gold in a portfolio.
Right, and it's probably important to highlight here that when it comes to investing in gold, there is no one size fits all. So every investor will have a different need or an objective from their investment point of view. So it is always advisable to speak to a financial advisor in advance. Now, our next question is about marketplace trends and how they are influencing demand. When we look at North America specifically, what current trends in the marketplace are driving demand for gold?
Yeah, and to answer that question, I think it's worth looking at demand for gold in ETFs and then look at demand for gold in the bar and coin market. So let's start with ETFs. Last year we saw modest outflows in North American gold ETFs in the region of 75 tons of outflows, driven, I would say, mainly by the rise in interest rates, which increases the opportunity cost of holding gold. In recent months, we have then seen tentative inflows with a surge in March after the US banking failures, driving flows into positive territory for Q1 in the region of 10 tons. We then also saw quarterly positive net flows in the second quarter in the region of 9 tons, as a ceiling on interest rates appears to be getting closer, although I would say expectations for when that ceiling will be reached have been pushed back over recent months. Another then potential reason for the demand could be investors positioning themselves for a slowing growth environment and the possibility of a recession. Moving on then to the bar and coin market, demand was strong last year overall. Retail investors in the US bought 113 tons of gold in 2022, the third highest annual total in that market after 2021 and 2009. And there, inflation and the Russia-Ukraine war were being the main drivers of that demand. US investment demand then appeared by year end and at the start of this year to have settled into a more measured pace. But the market then burst into life following the collapse of SVB and Signature Bank, and US retail gold demand hits a new high in the first quarter of this year with 32 tonnes. This was almost double the 5-year average of 17 tonnes. Now, that begs the question, will demand remain high? And that will depend on the health of the banking sector and if a recession indeed materialises.
Mm-hmm. And as I understand, the World Gold Council does a lot of research on this topic. So for someone who is looking to uncover more on the latest trends, what resources do you have available for them?
Sure. We have a wealth of information on our website, goldhub.com. It's free of charge and includes our research on gold demand trends, but also covers global macro developments and what that means for the gold market. I would encourage anyone that is interested in the gold market and also in broad investments to check out our research.
All over the world, precious metal buyers increasingly care about how their gold is mined and where it comes from. So can you tell us about some of the environmental, social, and governance standards that are being applied in the industry today?
Yeah, sure. As I mentioned previously, gold can play a strategic role in a portfolio, but it needs to be responsibly sourced. And there are a number of industry organizations across the gold supply chain working to develop frameworks and standards to ensure gold is indeed responsibly sourced and produced. The World Gold Council and its members, for example, developed and are currently implementing the Responsible Gold Mining Principles, which is an overarching framework that sets out clear expectations for investors, consumers, and also downstream users as to what constitutes responsible gold mining. And these principles, there are 51 of them, are directly linked to the material, environmental, social, and governance issues that the large-scale gold mining sector is faced with. As another example then of industry commitments to ESG standards, representatives from across the gold supply chain came together last year to sign a declaration which formally expresses a shared commitment to operating in a responsible and sustainable way based on a clear set of shared goals. In all, this group has agreed 10 key sustainability objectives, including commitments to responsible sourcing standards, respect for human rights, the advancement of the UN Sustainable Development Goals, and action and disclosures on climate change. This, I think, gives you a sense of the work happening on the ESG front.
Mm-hmm. So on the topic of transparency here, what role does technology have in provenance and the production standards for gold?
It is true that there is increasing demand from investors, consumers, and all the participants really for greater transparency when it comes to the gold supply chain. And that is to ensure that their asset is responsibly sourced and produced. And blockchain technology is a technology that can help. It can help the gold industry to demonstrate and evidence supply chain integrity. This really is the foundation of Gold 247, the World Gold Council's vision for transforming and digitalizing the global gold market. And the initiative is actually already underway. In 2022, the LBMA and the World Gold Council brought together over 30 participants from the global gold supply chain to pilot and implement a secure, confidential digital supply chain solution for the gold industry. And following that pilot, the industry is now continuing to work with technology providers to drive adoption and implementation of blockchain technology in the gold supply chain. More broadly, this integrity program is the critical foundation really for a trusted, transparent and digitalized asset. And this will make gold, in my mind, more relevant to a broader and younger investment audience as well.
Well, thank you, Jeremy, for sharing these insights and deepening our understanding on the strategic value of gold and investment portfolio, and also taking a look at some of the marketplace trends that are happening here in North America. Now, we also looked at how the industry is adopting ESG standards and the role that technology has to play in improving provenance and production of standards for gold. So again, thank you. But we do invite anyone who wants to learn more about these topics, as well as others, to visit the World Gold Council's website at goldhub.com. And for anyone who is new to gold, then you may want to take a look at invest.gold. So again, Jeremy, we extend our gratitude to you for joining us today. Thank you.
Thank you, Tiffany. Thanks for having me.